Hello, everyone. This is Mohammad Akif with Akif CPA, and today we'll be talking about our third blog in the series of tax traps for Canadian with a US LLC on E2 or L1 visa. So these are tax traps for Canadians who have a US LLC or on E2 or L1 visa or are looking to get E2 or L1 visa. And then we'll talk about why this tax trap happens, what leads to these traps, and how can you get out of these traps. All right, so if you are a Canadian and you're looking to set up in the business in the US, you're looking to set up an entity in the US or a US LLC, email us. I don't want you to be taxed twice or miss forms with huge penalties. Email us at info@akifcpa.com. We can definitely help you understand. We can help you understand how the US taxation works, how the Canadian taxation works, help you understand, give you some solutions for you to apply, and make sure that your cross-border profile stays simple, manageable, where you're not ending up in a double taxation scenario or additional taxation scenario or a scenario where you miss forms and then now there are huge mounting penalties. And then this is very important. So email us info@akifcpa.com and we can definitely help you. Without any further ado, let's get into the blog. Again, this is the third blog in the series. There will be 8 of them, and this is the third one. Let me share my screen so you can see what I am seeing. All right. So, dangers of S-Corp election for Canadians on E2 and L1 visa with US LLC. We're talking about why this is not a good idea, and then why you should avoid it. Right? So let's get to the idea of, let's find out first, why do you end up in this position? Right? What's going on at the back end where your trap is coming up, right? So what is happening? Majority of the issue comes from the journey that you're taking and then the advisors that you're meeting. US immigration attorney, US accountant, Canadian accountant. What this does, it creates an advisor blind spot. That's what we call it. Now I'll go through the blind spot advisor matrix and then tell you what exactly is going on. So you can see why these traps are happening, why there are issues coming up, and then how can you avoid them, right? So let's talk about the advisor blind spot matrix. All right, so where is it? All right, so the first advisor in your line when you're doing this is US immigration attorneys that you're talking to. Their job is to get you the E2 or L1 visa, nothing more. They'll tell you, hey, go do this LLC, simplest, easiest way to get your visa approved, get it done. They don't understand how the Canadian side is going to look at it. They don't understand what forms you need to file, or they don't know what forms you need to file on the US side for these LLCs. Their job is to get you that visa, and that's all they're focused on. All right. Number 2, local US accountant. Same thing. They're dealing with a local US person who has a local US entity. They're treating you the same way as any other person in the US. They don't understand the US-Canada tax treaty. They don't understand how the Canadian RSP, Canadian TFSA, Canadian RESP, Canadian investment accounts, Canadian mutual funds, Canadian ETFs, Canadian corporation needs to be reported on the US side. They have no idea about the penalties either because they're not dealing with Canadians on a daily basis. Right? So they don't know. It's not that they're trying to mislead you. They're just not aware of it. Local Canadian accountant, same scenario as a local US accountant, dealing with the GST, HST, T1, T2s, local issues. Don't understand the US-Canada tax treaty. Do not understand the US rules, the substantial present test, the filing requirements of a US LLC, or filing requirements of a US LLC on the Canadian side. I've seen many Canadian accountants making this mistake where they end up reporting this LLC on the wrong form. We'll talk about that in the 4th blog, and we'll cover that in that 4th blog. So all three advisors unknowingly lead you into these traps where you're stuck with certain things, and then the penalties will come up, the double taxation will come up, the additional taxation will come up, and then you'll be bogged down into all these fines and double taxes and additional taxes and the free money coming out of your pocket. We want to avoid that, right? We don't want that. So let's talk about, let's go to the blog again. All right. So let me just zoom in a little bit. So the U.S. accountant might advise you to have an S-Corp for the U.S. LLC. That's the first thing they will do, because that's the common thing that happens on the U.S. side. What they don't understand is that you might not be a U.S. resident, number one. Secondly, again, the Canadian side might be treating this LLC in a different way. They have no idea. So when you are doing this, or you're trying to save taxes, where you end up in a situation where this becomes even more messier. So a Canadian tax resident who might have become a U.S. resident doesn't mean that they are, or who's not a U.S. resident is not eligible to be an S-Corp. That LLC cannot become S-Corp. They cannot have the election. They're not allowed to have an election. And I've seen these cases where a Canadian who's living in Canada, has business in Canada, somehow ends up getting a S-Corp election, which they're not eligible of because the local accountant was not aware of it. They're not even filing the right forms. That's the worst part. Right? So what is the solution? Think of S-Corp as an option rather than something mandatory. And this option can be utilized at any time of your journey, of your business journey. It doesn't have to be now. It has to be when it is required to be, when it makes sense for your tax planning purposes, when it makes sense the business is making money, right? You're doing tax planning to reduce taxes. And then how the taxes come around is through profits. You gotta have profit to pay tax. So S-Corp initially might not make sense for you, might not be the best option for you because it is an option, right? So utilize it as when it's required for your situation. It doesn't have to be right away. It doesn't have to be right away. And even if you are eligible to get S-Corp election, of course, we can have the same thing on the Canadian side, but that's a longer process that I don't recommend. It's a costly process that I don't recommend. I want things to be simple, not complicated. So, even for that S-Corp to be eligible, you gotta continue to be staying a U.S. resident. You cannot become a non-resident. So these are all the things that we are looking at when we're doing this. Again, think of S-Corp as an option, not something mandatory. Utilize it at the right time with tax planning, understanding both sides, Canadian and the US. And we can help you do this. Email us info@akifcpa.com. Again, email us info@akifcpa.com with your tax situation, with your background, and we'll gladly help you. Thank you.